Students, we are going to discuss about the role of an auditor in incorporated entities and the different types of audit reports. So what do you mean by auditing? You may be knowing very well. So what is meant by auditing? So auditing is a systematic examination or the systematic inspection or the systematic examination or the systematic verification or the what? The systematic correction. So done by the registered auditor, done by the registered auditor on the different financial items of the financial statements prepared by the company. So in accordance with the what? Okay, in accordance with the certain standards. Okay, so here we are taking the IFRS standards. Okay, whether the financial statements so prepared by the entity comply with the IFRS standards or not, the auditor is doing the inspection or doing the examination or verifying. So all the what? Okay, the auditor is verifying the books of accounts, verifying all the accounts, so verifying the statutory records or statutory documents, then the vouchers, then the sales invoices, vouchers of the organizations, everything. So we will be checking. So whether the company so complies with the IFRS standards, otherwise certain auditing standards while preparing the financial statements and publishing the financial statements or not. Okay, so that is called the auditing. Okay, so here, so mainly, so when you are doing the auditing, you should keep the qualitative characteristics of the financial statements so in your mind. Okay, the entity has to keep in its mind the qualitative characteristics for preparing the financial statements. So that is the relevance, the consistency must be there, relevance must be there, consistency must be there. So then what? Then transparency must be there. Then the faithful representation of the financial items in the financial statements. Okay, so then faithful representation, that then what? Okay, so then the understandability must be there, then the comparability. So all these financial characteristics the entity must keep in its mind while preparing the financial statements, so complying with the IFRS standards or any accounting standards. So otherwise the international auditing standards, so they have to do all this. So they mainly here, okay, there are three parties auditing. One is the first party audit, second, the second party audit, the last one is third party audit. So what do you mean by the first party audit? So here the first party audit, so all three parties are so going to do what? Three parties are going to check the good stewardship of the directors of the company and whether the financial statements are reliably prepared or truthfully prepared. Then the financial statements will give you the fair representation of the information. Okay, the fair view of the company or the fair value of the company. So that is very, very important. Okay, so whenever you're preparing the financial statements as per the accounting standards, particular accounting standards, then whether it should give the fair view of the concern, fair view of the concern in terms of the financial standing or in terms of the financial performance, that each and every auditor will be checking the good stewardship of the directors of the company and as well as truth and fairness of the financial statements prepared by the entity. So that is very, very important. So there are three parties auditing is done. So first one is first party audit, second one is second party audit, the last one is third party audit. So first party audit means just you can invite any person. So within the company, okay, any expert within the company or any employee. So within the company, so we will be doing the internal checking, okay, internal checking of all the departments. So all the accounts, then all the statutory records, so all the documents, all the materials, facts, figures, everything. So you can go through all this, then you can come to conclusion. So whether, okay, so whether the financial statements prepared by the entity comply with the international auditing standards or IFRS standards or not, okay, then you can make a compliance report. Okay, so NCR, non-compliance report, can make a compliance report. So based upon that, okay, based upon the opinions or suggestions given in the non-compliance report, then the next one is called the second party audit. So second party audit also at the interest of the company. First party audit is also at the interest of the company is conducting. So second party audit means because if you are not happy with the internal auditing, so done by the employees, anyway that internal auditing will be done. The internal auditing will be done. So then the entity may ask an expert from some other organization or from some other company to do the external auditing. Okay, so external auditing, so that is called the second party. So auditing, so there they will be charging some money for coming to your institutions and do all the auditing procedure and everything. So that is the external auditing, because you are inviting a person from the similar organizations or a person from some agency to do the auditing. So that is the second party auditing. Then so they will also prepare the non-compliance report. Then finally you will have the third party auditing. So third party auditing means the board. Okay, so the board, the governing board. So for example, the NAC has conducted auditing at our college. Then our college has received A++. So with the 3.78 grade point. Okay, so like that. So that is the NAC has conducted an audit here. Okay, PR team has conducted an audit here. They visited, they checked everything. Okay, the curricular aspects of our college, non-curricular aspects of college, each and every practice so done by our college, each and every culture done by our college. Okay, so all they are checking everything. So then finally they will be giving. Okay, so that is called the third party audit. Third party audit means so from the auditing board. Okay, from the auditing board, so they will be coming and so when that third party auditing is done in the company or in the entity, so they will check only what. So initially they will check the non-compliance report done by the external auditor and as well as the internal auditor within the company. So the next one is the objectives of an audit. What are the different objectives of an audit? So the financial statements prepared by the entity should comply with the auditing standards internationally. So that is first one is International Standard on Auditing, ISCA 200. Okay, it should comply with the professional standards prescribed by the International Standard on Auditing, ISA 20.